Hello everyone, Stuart Heath here, CEO and founder of Harvard Grace Capital. It seems that everyone wants to do their own economic forecast these days. Obviously, I like to play economist as well and get in the game. So last week, based upon the comments from Chair Powell, a lot of sort of the consensus predictions is that there would be a total of 4 quarter-point rate cuts, including the one last week, 2 more this year, and then 1 in the spring, Q1 perhaps, bringing the Fed funds rate down a full point to the 2.75 to 3.0 range, which is where a lot of people believe is the neutral rate, the 3.0. So neutral rate meaning it's not restrictive and it's not supportive of growth either. It's just neutral, which is where we would all want the Fed to be. The OECD has a slightly different opinion. They think there's going to be a total rate cuts of 3/4 of a point, not the full 7, not the full point, but 0.75. And so everybody's in on the game. The real problem to me is I look at the 10-year Treasury. I'll flip over here to real quick. The 10-year Treasury had been trending lower for about 3 weeks before the rate cut. Everybody thought in anticipation of a rate cut announcement. But then spiked up after the rate cut announcement and has stayed somewhat elevated. It's exactly the same thing that happened a year ago. It was trending down, and then the Fed came in with a surprise half-point cut that seemed to spook the bond market a little bit, and it stayed elevated through the end of the year with one bit of reprieve along the way. So we're still trending well above our 52-week trailing average of rates, and this is what we really got to watch. Now, I will say this. We might be having some short-term bond market tantrums, if you would, or just outright concerns. But the lenders that we're dealing with are already lowering rates to me, very acceptable levels. We're closing a deal on Friday at a fixed rate of 6.5%. Very pleased with that. Would I like 6 better? Of course I would. But if you can't make a deal work at 6.5, then you need to get out of the business. But anyway, we find that the lenders and the long-term lenders are already adjusting rates for where they think that they're going. So anyway, would love to hear from you about that. Click the link. Let's have a conversation. Follow us. Also remember to save the date for our Harvard Grace Tax and Investment Summit, which is going to be October 28th and 29th. We'd love for you to register and get some really good information. Thanks. Bye.